I switched on the recording, and in the yesterday's lecture, we started talking about IAS1, presentation of financial statement, and then we discussed to certain extent. I think we were here. And can I get to know a little bit background information of the new person here?
Hello.
Yeah, hello. MAC. Am I meeting you today or you were there in the class before? Mr. Zubair, Assalamu alaikum. Yes, Haitam. You remember where we stopped yesterday? So I think we will continue from this point. Under IAS1, what IAS1 includes is some certain Mr. Zubair. Some certain principles which are governed under IAS1. These are some certain principles. One is that we have to make sure a fair presentation and compliance with IFRS. Now, when you're producing your financial statement, the financial statement should be presented in a fair manner.
Yes, sir. Yes.
It should be. It should be presented in a fair basis so that every user is getting the right benefit. Every user is getting the right benefit of the financial statement. If it is not produced in a fair basis, then there could be possibility of biasness. There could be possibility of biasness which could harm the objective financial reporting. So one of the requirement of IAS1 is to ensure that it is presented in a fair manner. Furthermore, they say like this: financial statement is fully compliant with IFRS. You have to state this as one note in your financial statement. You should state this. Now, suppose if the financial statement is deviating from any any IFRS, that also needed to be disclosed. What I'm trying to mean, in case the company is deviating from example, IFRS 8. They don't comply with IFRS 8, then this fact should be disclosed. Are you clear with this?
Yeah.
Yeah. Mr. Haitham? Yes or no? Secondly, the financial statement is prepared on the valid going concern assumption. The financial statement, the financial statement we produce is having a valid going concern. Now, what is this going concern? Anyone can elaborate this to me? How will you know a financial statement is, or this business is, based on valid going concern? When you're reading by reading the financial statement, can we figure it out? The business is having a problem with going concern, or the business is with a valid going concern principle? Is there any clue?
The going concern means same format we have to use. Like if last year we have one policy, the second year we should have the same policy.
The way you interpret, that is not necessarily going concern. That we call it a separate name.
Okay.
That is
Consistency.
consistency. I'm talking about going concern.
Oh.
Any of you can help me understand this? Mr. Haitham Habibi.
How it presents.
Pardon?
The way how it presents.
I'm sorry, I couldn't hear you well.
I said maybe the way how it presents.
Okay, what you're saying is the way we present.
Yeah.
Is what you're saying?
Yes, yes.
Now, brother, there could be deviation in the method of presentation. There could be deviation in the method of presentation. But cannot confirm that they have issue with going concern. That they have issue with, you cannot confirm that they have issue with going concern. Now, example, depreciation, you present using straight line method, but if you change it to reducing balance method, for the last 3 years you follow straight line method, suddenly this year you are changing to reducing balance method. Again, this also changes in the way you present. You agree with me, Mr. Haitham?
Yeah.
Yeah.
I was explaining the same thing but a different way. So you explained very well now.
So
now I got it.
But this is not what we try to mean regarding going concern. in simple terms, the meaning of the word going concern is that how sure the business will have continuity. How sure the business will have continuity. Let's say now I open a business on 1 January 2020. And at the time I opened the business, normal intention of mine, what do you think my intention is? To close the business next month? No, right? What I want is, I want to continue the business for a very long future period. Sa walala.
You're talking about the continuity principle. That's I think.
Correct. That exactly. This is what going concern is. So, if you know that the business will continue, the business will continue a period exceeding 12 months. A period exceeding 12 months, then you see, in this business I have two assets. I have receivable, 100, and I have motor vehicle, 1,300. So what are my total assets now? How much is the total assets?
1,400.
1,400. But how I classify this asset?
Current asset.
This is current. But what about this?
Fixed assets.
Yeah, we have a different name, right?
Yeah. Non-current asset.
Now, when I define non-current asset, what I told you all, that assets will last for a period exceeding how long?
12 months.
12 months. So, in a normal situation, when you see a financial statement that they classify the assets as to current and non-current, you could easily make a conclusion that this business is not having problem with going concern. If you think the business will struggle and they will close in 3 months' time, could you classify any asset as non-current asset?
No.
Can I do that?
Sorry.
When I understand I am shutting down the business in 3 months' time. But in my books, I have a motor vehicle. Normally, the nature of a motor vehicle is a non-current asset. But for my business, when I am going to close it in 3 months, is there any point of keeping that as non-current asset?
Yeah, if you have non-current asset.
Yeah, regardless, that's what you have a non-current asset in your custody, but you're going to close the business in 3 months. So then, could you classify that particular motor vehicle as a non-current asset for your business? What do you think?
I didn't get exactly that.
You didn't get the message? Okay. Now, when I produce a balance sheet, I have non-current asset. motor vehicle 1200, and I have current assets receivable 300. So this is the total 1500 I have.
Yeah.
Now, when we discussed about how to define the assets, we said that any asset whose life is greater than 12 months, we classify as what?
Yeah, it will 12 months
Current
you have
assets.
appreciate this.
If the asset's life will exceed 12 months, we classify them as non-current. Yes or no?
Yeah. Yeah, yeah,
Correct.
right.
Yes. Let's say this date is 31st December 2022. But now you receive a court order, the company should be closed on 1st April 23.
Hmm.
So now you preparing a financial statement having very well known that on 1 April you will close the business. So from 31st December 2022 to 1st April 23, how long the time period is?
Long period financial statement.
No, you didn't get my question. My question is from 31st December 2022 to 1st April 23. How long?
Yeah, it's 3 months.
Very good. It's 3 months.
Yeah.
3 months is greater than 1 year or less than 1 year?
No, 3 months is less than 1 year.
Less than 1 year. So based on our definition criteria of non-current asset, what should that meet? That asset should be with us. How long?
1 year.
1 year. But in this situation, this motor vehicle, will it be with me for 1 year?
Since it's
No.
identified, we can consider it
3
as a
months.
current asset.
Pardon? Just with
Since it's
item, right?
Yeah. Since it's identified, can be considered as a current asset.
Definitely. That's what I want to say.
Yeah.
So what you need to do is, you
Similar to
have
the-
to reclassify this to
Current asset.
Current
Current.
asset.
It's similar
So,
to
At the
the
time
because
of
why?
liquidation, if it's liquidating
Yeah.
as per the due to some legal
Some
regulations.
court case, some voluntary reasons, for any issue, or you decide, the owners are traveling out of the country for any given reason, you gonna shut down the business for a period less than 12 months. Then you cannot keep any non-current assets in your books. Are you very clear with this?
Okay, got it.
Fine. Now what about then? What about the other side of it? Liability side. You
Liability
have
side.
a non-current liability. You have bank loan.
Yes, this is what I wanted to say actually, because this is the same example that we have a loan.
Same
and,
situation.
Yeah, same situation.
Now, if the bank will get to know that you're going to shut down the business in 3 months, would they be sleeping in their bank?
Sorry.
Again,
If the bank will get to know that you are shutting down your business in 3 months and you already have a loan with the bank, and the agreement is they give you 4 years time.
they will reclass
But
it
now
from,
what is the situation?
So we have this long term will be converted to short term.
Very good. This needed
We have
to
to
be
convert to short term.
reclassified to
Short term.
yeah.
current
So
liability.
meaning current liability. So your bank loan will be reclassified here. So this is, you have to review and find out whether the company is on a continuity assumption is valid or not. If the continuity assumption is valid, no problem. Just prepare the financial as it is. But if the continuity assumption is not valid, then you have to reclassify the financial statement. Now, what are the indicators How we know the business is struggling or the business is having going concern? What are the indicators?
Their procedures as we
See, one
check.
example.
Yeah.
One example is continuous losses.
Hmm.
If the business is continuously incurring losses, what is the point of running the business?
Hmm. Okay.
Correct?
Correct.
So that is one example. Second example,
Depreciation. We are
continuous
calculating.
cash difficulty. You know, there is a saying, clean suit, empty pocket.
Sorry.
There is a saying, clean suit, empty pocket.
Yeah.
You will see this man very clean, tightly wear the suit and dress and everything, but every time he won't have $1 in his pocket.
Hmm.
So in the business, if you experience a continuous cash difficulty, and that's also one symptom, one indicator that the company is facing going concern issue.
Other reason also, maybe lawsuits. Sometimes, they by lawsuit, and they decided to close this entity, for example.
Yeah, very important reason, lawsuit. This is what you're telling me, right?
Yes.
This is one of the serious reasons. Excuse me.
Alhamdulillah.
Sorry, I had to bring some water.
Yeah, no issue.
So the lawsuit, court voluntarily liquidate the company. It's a mandatory order.
Yes.
There are other reasons also. What about
Collapse.
reputational damage?
I think last time you given some example. If some good brand is having bad customer service and there is a reputation.
Yes. Yeah.
Reputational damage.
So we talked about the body shop.
Yeah.
Another realistic example in the Middle East, this company, this company who sells
Cheese.
it is one of the famous Danish company,
Same like
Denmark company.
Indonomy. They got some, I think, issue, and after that their sale went down.
Yeah. I hope all of you know the reason.
Yeah, yeah.
In Denmark, they started publicizing some cartoons against Prophet Muhammad,
Mm.
and then that created a huge business problem to the company owned by Fuxis in Middle East. All the supermarkets have been ordered to unshelf all the display. So these are what I'm trying to mean. Reputational damage. A reputational damage can kill the business at no time. No matter how good and best you are, if you are creating a social unrest, you are creating a social unrest, then this will lead into shutting down the business, and that will also lead to going concern issue. Understand?
Yes, clear.
And what about
Bankruptcy.
what about key personnel? In the company, the CEO of the company resigns, and that goes public. And if the CEO resigns, and if that goes public, and the trust the customer's head or the stakeholder's head with the company will be questioned. Understand me?
Yes, clear. Is it,
Accordingly, this
main
will also
reason?
may result. Yeah, please repeat.
Okay. Bankruptcy
Yeah, I'm
as well.
listening, Mr. Haitam.
I said bankruptcy as well. But loss of key, personnel. When it comes to CEO, yeah. The owner, you mean? I don't know.
Not the owner. Like, let's say your company have a CEO.
Okay.
CEO of the company may not necessarily should be the owner of the company.
Yeah, definitely. Yeah.
So this person is the one who is running the show. And if suddenly they develop a dispute between him and the owner, and this man resigns the company.
Okay.
What do you think what will happen?
Well, there will be losses, in let's say, for example.
There will be the trust. The
The trustee losses.
Yes. And all this.
Financial losses, they will definitely it will happen.
And if the financial losses are very significant, then that will lead into a question of going concern.
Exactly. You have also another example, bankruptcy.
Yeah, I'm coming to one by one.
Yeah. Okay. Sure.
One second, I'm writing in bankruptcy. Bankruptcy is total loss. You have nothing to do. You got to close the business. Then automatically the going concern is there's no more going concern. In Sri Lanka, I think it is applicable in UK also.
Sorry to interrupt you.
You can go to court.
Sorry to interrupt.
To court. Pardon?
Sorry to interrupt, but your voice becomes, unclear. So.
Can you hear me now?
Yes, much better.
Okay. Now, in Sri Lanka or in UK, you can go to courts and apply for bankruptcy. You can apply bankruptcy. And the court can decide an order. Okay, this company cannot run anymore, and accordingly, we will close this. Or you can close it. But the problem is, court will also give you some condition. One of the conditions is that the person cannot travel in the car, in the back seat. The person cannot travel in the back seat of the car. You know, in the car.
I know. What is the reason?
A very funny law, this one.
Yeah.
On the back side, you have two seats, right? Right hand side and left hand side.
Okay.
The left hand side seat on the back seat considered to be executive seat.
Okay.
And if you are a person who received a court order for a bankruptcy, you are not allowed to sit there.
Okay.
And moreover, you cannot wear color dress. You should wear white and white.
White and what, sorry?
White and white.
Okay.
These are some old law prevailing in Sri Lanka and for certain extent in UK as well.
Yes.
So anyway, bankruptcy is one. And what about economic unrest? Now, if you remember,
Corona.
you know, the financial crisis in US.
2008.
You remember this?
Yes, 2008.
Same like when COVID came, the economy fell down.
2008.
COVID is a recent one. I'm not talking about the COVID. I'm talking about something in the past. So 2019, 2008 to 9, the Middle East, we suffered a huge problem financially. You all remember?
Not that much, but in Saudi.
There is a bank called Lehman Brothers. The Lehman Brothers were considered to be one of the leading banks in the world. And they became, they went on to bankrupt. Because of they went to bankruptcy, all the customers who were having deposits, they also struggled. The people from that bank, the customers from this bank are not considered to be all other banks. So every bank suffered a loss. Accordingly, Middle East, lot of business struggled. So economic unrest can also create a problem to going concern. Clear? Yes or no?
Yes, that's clear.
Okay. And also, not to forget, natural disaster. Like you told me, corona or tsunami. So that can wipe off the business totally. So then it will be another big issue. Yes.
Yes,
So these are
sorry, there was internet disconnection.
by from whose side?
I think 2 minutes ago. Bankruptcy.
Yeah.
I just see only bankruptcy. After that, it was not clear to me.
Oh, okay, I will repeat. We talked about one of the reason for going concern issue
Yeah,
is Mr. Haitam correctly pointed to me, that is bankruptcy. And the bankruptcy can take place voluntarily, where the business owners can go to courts and then they can request for order for bankruptcy, and then accordingly the going concern will be an issue. So that's exactly what one of the reason for going concern issue. And then we have economic unrest, meaning economic problems, inflation issue, financial crisis, so on. So that is also can lead to a scenario for bankruptcy.
yeah, no, got it.
Yeah. Is it clear now, Mr. Zubair?
Yeah, yeah,
Yeah. Then natural disaster. The natural disaster also one possible reason for going concern. Now, like we had tsunami, we had corona, and time to time we have earthquake, etc. So all this will create huge shackles to the business, and some business will be fully wiped off. Some business will be fully wiped off. So that is another possibility for going concern issue. We could keep on discussing about that. Is that clear for all of you now?
Yes, it's clear.
Now we also IAS 1 says that your financial statement you should prepare on the accrual basis. All your financial statements should be based on accrual. Now, actually, when you talk about how you prepare a financial statement, method of preparing financial statement, there are two methods. One is cash basis, other one is accrual basis. IAS 1 says you should prepare the financial statement based on accrual basis. What is this accrual concept? All transactions should be recorded when
Accrual.
incurred or realized, not when paid or received. There is no relationship of the cash flow for you to do the transaction based on accrual basis. Is that clear?
clear.
Yes, clear.
Then materiality and aggregation. An item will be material when the omission or misstatement representation of the same will result into a change in the economic decision of the users of financial statement. Is that clear? You all understood what the sentence I wrote here?
Yeah.
Now let's say, to make you understand, I have one financial statement and I deliberately add one information which I did not share to the users. And then I gave this financial statement to the user to read. And I requested them to make a decision. After they made the decision, I record the decision. I record the decision. So what I did, I produced one financial statement. I have deliberately added one additional piece of information into the financial statement, which I kept secret to the user, and I asked them, please read it and make your decision. And after they made the decision, I record the same. Now what I do, I take the financial statement back. Then again I prepare the financial statement. Now that piece of information I removed. What I did, I removed that particular piece of information and then I have given this to users. Now again what I do, I record the decision. Now if you will compare decision number 1 and decision number 2, and if there is any significant difference between these two decisions, then this item is material. You understand what the context I am telling?
Yes, clear.
So that should be very clearly understood. So how I decide anything is material, it is based on the outcome of the user's decision. The outcome of the user's decision will be a significant call on that. Okay?
Yes, clear.
So, when the item is material, if the item is material, this can be presented separately in the financial statement. If the item is material, and this item can be presented separately in the financial statement. But otherwise, now also we talk about aggregation. Immaterial items which are similar in nature should be, or not should be, sorry, can be clear. Is that understood?
Yes.
Immaterial items which are similar in nature can be aggregated. Now, if you in the let's say for example, it's miscellaneous expense. What we do is in our income statement under administration expense, you will find one line item called miscellaneous expense. But then every single bits and pieces of expense you will club it under this. Savalala.
Yeah.
So that's exactly what this is saying. When you identify things are material, you got to separately disclose it. But if the items are immaterial and similar in nature, which you can aggregate. Now, another subject is offsetting. What do you mean by offsetting? For example, A 100, B 75. So what is the net answer here?
The screen is stable. I can, there is a general feature. I did not see the.
You don't see the screen?
No. No, it's not visible for me.
Is it visible now?
Yeah, now it's yeah, now visible.
Okay. Question. Now we're talking about offsetting. See, A 100 plus, B 75 minus. So net answer is how much?
25.
25. Now this is what exactly offsetting means, literally. But IAS one says,
IS1 presentation of financials.
yeah, offsetting is normally not allowed unless any other standards requires the same or it carries similar nature. You can't, let's say, you have a sale, 1 million, and you have to pay commission 150. So if you try to do like this, in your income statement, you show net sales 850. This is what they are saying is not allowed. You should show the gross sales and then you should show the commission separately as one expense. Understood?
Same like other income. We have to make separately.
Yes. So IAS 1 specifically discuss about this. IAS 1 also talks about frequency of reporting. How often you should report your financial statement. Normally, every 12 months. Normally, every 12 months, we should report our financial statement to the shareholders or users or your stakeholder. Except when any special need arises. Example, for listed public companies or quoted public companies, QPC. And let's say this company is registered in US, then that is regulated by SEC, Securities and Exchange Commission. If any company in Qatar, that is regulated by QE, that is Qatar Exchange. So, one of the requirement of them is to produce financial, they call it interim financial statement. Interim financial statement is a financial statement for a period less than 12 months. And it could be 1 month or 2 months or 3 months or 6 months or anything. Understood?
Yeah.
So that is what you call frequency of reporting and comparative information. You should produce financial statement with the similar information for the previous year. And your financial statement for the current year should match and should be consistent with the financial information for the last year. Current financial information should be consistent with the previous year financial information. Is it clear?
Yeah.
So you should present last year financial information and the current year. So you should be able to compare. But one condition, should be able to compare like with like or apple with apple. So that is also another requirement. Finally, consistency of presentation. The presentation of financial information should be consistently presented. It should be consistently presented. You should do whatever the policies you are following. Now, one good example, we again talk about depreciation method. Last year you followed the straight line method, year 1, and when you go to year 2, also should be straight line method. Clear?
Yes, clear.
Yes.
So, fair presentation and compliance. Financial statements shall present fairly the financial position, financial performance, and cash flows of an entity. You should present the financial position, financial performance, and cash flows of an entity. Faithful representation of the effects of transactions, other events, and conditions in accordance with IFRS, with additional disclosure when necessary. When you talk about this, I hope you all remember we discussed about three things.
Yeah.
Completeness, that is one thing. True and fair view, and then biasless. So you got to ensure you are producing the financial statement in these characteristics. Clear?
Yes.
I discussed about going concern in very detail. So I'll just go through this. When preparing financial statement, management shall make an assessment of an entity's ability to continue as a going concern. Entity's ability to continue as a going concern.
Even it is compulsory clause, I think.
Pardon?
Yeah, even the auditor is sending a letter which is written that you are following the going concern and these points.
Yeah. It's one of the very essential element of the financial reporting.
Yeah.
So prepare financial statement on the going concern basis unless management either intends to liquidate the entity or to cease the trading or has no realistic alternative but to do so. So you got to prepare the financial statement on a going concern basis unless management either intends to liquidate. So, my mistake, we have to close it. No other use, no other alternative. I'm going to close it. Or cease trading, meaning if I have like 10 activities, I'm closing 3 activities. Finally, and you had left with no other option but to close the business. So in all these situations, you have to revise your financial statement and reclassify all your non-current assets as current assets and all your non-current liability as current liability. Accrual basis of accounting. An entity shall prepare its financial statements except for cash flow information. Cash flow information you have nothing to do but to prepare based on cash basis. And all others, your balance sheet, your income statement, you should prepare based on accrual basis of accounting. Materiality and aggregation. An entity shall present separately each material class of similar items. An entity shall present separately items of a dissimilar nature or function unless they are made material. An entity needs to provide a specific disclosure required by an IFRS if information is not material. Offsetting. An entity shall not offset assets and liabilities or income and expenses unless required or permitted by. I hope you now understand what I told you all. By an IFRS. Frequency of reporting. An entity shall present a complete set of financial statements, including comparative information, at least annually. When entity changes the end of its reporting period and presents financial statement for a period longer or shorter than 1 year, an entity shall disclose. If you happen to prepare a financial statement not 1 year, either more than 1 year or less than 1 year, then you should give a disclosure with regard to the reason for longer or shorter period and the fact that amounts presented in the financial statements are not entirely comparable. See what will happen? you will have, let's say you have 2021 and 2022. This is 12 months and this is 14 months. Can you compare this? What do you think? Mr. Haitham, what do you think?
Yes, with you.
Yeah, can we compare if we have 14 months and 12 months financial statement?
No, we cannot.
We can't.
We cannot compare. So, entities shall disclose comparative information in respect of the previous period for all amounts reported in the current period's financial statement. Obviously, you got to disclose the comparative information when you are reporting the current period, except when IFRS permit or require otherwise. So if any other IFRS like IAS 8 or IAS 7 or IAS 15 or whatever, and if they say that you don't need to do this, then it's fine. Entity changes the presentation or classification of item in its financial statement. The entity shall reclassify comparative amount. Consistency of presentation. An entity shall retain the presentation and classification of items in the financial statement from one period to the next. Please note that I'm just reading it because I had done the discussion just before. All right.
No problem.
And if you have a doubt, feel free to ask me a question.
Sure.
Yes.
Yes, Mr. Zubair, it's clear for you?
Yes, sir. Yeah.
And Mr. Haitham?
Yeah.
Yes. It's
All right.
clear.
Yeah. So,
Bathroom.
it is apparent that another presentation or classification would be more appropriate. Or another IFRS requires a change in presentation. Statement of financial position. At minimum, the statement of financial position shall include the lines that present the following amount. I hope these are examples. I hope all of you know property, plant and equipment. In property, plant and equipment, later we will discuss IAS 16. Investment property, IAS 40. Intangible assets, IAS 38. Financial assets, IAS 32, 39, IFRS 7 and 9. Investment accounted for using equity method that we will study under consolidation. This is IAS 28 associates. Biological assets, the accounting for agriculture, IAS 41. Inventories, IAS 2. Trade and other receivables and cash equivalents, IAS 7. So we will discuss all of these standards on our journey. Clear?
Yeah.
Yes.
What was specified? Okay, so this is another standard. IFRS 5. Trade and other payables we will disclose in the financial statement. Provisions, IAS 37.
37.
IAS 37 provision. Financial liability again, IAS 32, 39, IFRS 7 and 9. Liabilities and assets for current tax, IAS 12. Deferred tax liabilities and deferred tax assets, again, IAS 12. Issued capital and reserves attributable to owners of the plant. So that is equity. An entity shall present current and non-current assets and current and non-current liabilities as separate classification in its statement of financial. That we discussed. All the assets should be classified as correct,
Yes.
and all your liabilities also classified as current and non-current, except when the presentation based on liquidity provides information, then an entity shall present all assets and liabilities in order of liquidity. What they are saying is, if you find out a different presentation method is much better and useful, then you go to that. And even the liquidity base is also one acceptable method. Statement of comprehensive income. An entity shall present all items of income and expense recognized in a period. Now, see, you have your statement of comprehensive income, and this has two sections. Here, P&L, and here, other comprehensive income. And we will present that in a single comprehensive income, and also standard allows you to show it in two different statements. But we don't do this. In two statements, a statement displaying components of a profit or loss, and a second statement beginning with profit or loss and displaying components of other comprehensive income. And what are the items you will see in income statement? Revenue, finance cost, share of profit or loss of associates and other joint ventures, tax expense, profit or loss, meaning the net profit or loss. Component of other comprehensive income specified by nature. You will specify that by nature. Example, revaluation surplus. Share of the other comprehensive income of associates and joint ventures. You can also bring that. And then you finally have total income.
Comprehensive.
So, notes. You remember, I discussed with you all a financial statement.
5 component.
Yes.
Yeah.
And the fifth component is
Notes.
The notes shall include present information about the basis of preparation of the financial statement and the specific accounting policies. You will talk about accounting policies and the what is the current way of preparing financial. And also you disclose the information required by IFRS that is not presented elsewhere in the financial statement. Provide information that is not presented elsewhere in the financial statement but is relevant to an understanding of any item. So these information you will present as notes. An entity shall, as far as practicable, present notes in a systematic manner. You have to present in that way. Entity shall cross-reference each item in the statement of financial position and of course to any related information in the notes. Disclosure of accounting policies. So what is this? When you talk about accounting policies, you have to tell your users or shareholders what accounting policy you are using. Example, depreciation. If you choose straight line method, you have to tell this to your shareholder. When we calculate depreciation, we are following straight line method. An entity shall disclose in the summary of significant accounting policies measurement bases used in preparing the financial statement. The other accounting policies used that are relevant to an understanding of the financial statement. With this, we are done with IAS 1. Actually, I told you yesterday I will be concluding today at 8 p.m. because I got a what you call medical appointment. But before that, just want to ask you, did I share the IAS 1 presentation with you?
Yes, it's in the group.
You all received or no?
Yeah, I can see that you have sent,
Okay. Now what I will do, I'm going to share some questions now. And we will discuss the question in our next class.
Okay. It will be good if
Okay.
we have a question so we can repeat and
Yeah. Before we go to the next theory or standard, I will discuss questions related to IAS 1.
Yeah.
So that everyone will have in the same board with regard to the understanding of the standard.
Yeah.
And also told you that I will not be available tomorrow as Friday is being a family day. Our next class will be on Saturday.
Okay.
Saturday we will meet at 6:30.
Yeah.
Thank you so much.
Okay. One more thing. For yesterday lecture, there is no recording. If you can share the yesterday.
So there is recording. I think Jean will share.
Okay. Because yesterday and today is pending lecture.
Yeah,
Because,
today is just now we are finishing.
Okay.
And yesterday I also yet to receive it, and she will share hopefully, inshallah.
Okay, sir. Okay. Thank you, sir. Thank you.
Okay.
Okay,
Thank you so much.
No, thank you, sir. Thank you.